Hi traders, Luke Suddards here, back from leave and ready to kick off Technical Tuesdays where we left off, get back into the swing of things. So let's take a look at the charts without further ado and discuss some of the key price action movements that I'm seeing and what you need to know. So with the dollar, it's been really strong. It's broken out of this 93.2 range that it was in, the 93.2 to 89.65 range at last. It came quite close to tagging the 95. Last seen in, we had levels last seen in September 2020. There's a nice ascending channel that has formed since the June range support lows. The RSI has moved out of overbought territory and is close to its 55 level of support, which has held previous price dips. The moving averages are all moving in the right direction. And targets wise, on the upside, the previous high of 94.5 would be a good level to monitor, and on the downside, the former range resistance at 93.2 with the 21-day exponential moving average just above there. We'll have to see what those jobs data on Friday brings, whether it's going to catalyze a move higher from a really strong jobs number or move low on a really weak jobs number. I think you're going to have to see a really big surprise or miss to actually get some movement. Moving on to the euro, if we zoom out on this chart, as I've done here, we can see price actually dropped all the way back down to its September, November lows back last year in 2020. Price has stabilized a little bit now and it's back up to the 116 level. It's been under immense pressure and it's seen weakness post that German election. I still think it's a good candidate for shorting the rallies, but would like to see the RSI move a little bit back up higher to that 52 level. 117, where the 21-day exponential moving averages would be a good zone to keep an eye out for the bulls. And on the downside, moves below 116 could actually see us go falling back to that round numbered 115. Sorry. Moving on to cable. Cable's managed to actually have a bit of a stronger rally than the euro. Off its multi-month lows at 134. We're now back up almost to the 21-day exponential moving average. If I zoom in there a bit, and around the 136, 136.5 area, this will be a key test for the bulls to overcome. The RSI is nearing the 53 level, which in the past capped further price rallies. For further moves higher, 136.6 and 137.5 would be good levels to monitor, and on the downside, 135.5 as well as 134 would pique my interest. Moving on to US dollar yen. It broke out of its range too. There's been a lot of range breakouts since I've been away in Spain. As US yields surged higher, price made a new multi-month so price made a new multi-month high and tagged the 112 level. Price is now back to the 111 former range resistance, and with the RSI also on the 58 level former resistance. Targets wise, on the upside, yields have surged over the past couple of weeks in the US, and that's what's actually, given the close correlation with US dollar JPY, that's what's seen the surge in US dollar JPY too. Moving on to the targets, on the upside, the former high around 112 would be my initial idea and target. With moves down, with downward price moves, I'd be looking at the 110.3 former support, just below the 21-day exponential moving average. Moving on to the New Zealand dollar, the Kiwi has seen some large moves recently. Prices hovering just under the 0.697 level. Could tomorrow's RBNZ meeting be the catalyst to push this cross higher, closer towards 0.7? Near those 50-day simple moving average and 21-day exponential moving average. Market's pricing an 86% chance of a hike, so the hike doesn't materialize, then price could come under pressure. If we saw two hikes, then 0.7 level should easily be reached. This also coincides, as I said, with the 21-day exponential moving average and the 50-day simple moving average. On the downside, 0.692 would be, and 0.69 would be areas of interest for me. Then moving away from forex to the commodity space, oil's one that you've got to have on the radar. It seems unstoppable at the moment and has smashed through the former multi-month high of 77.82. Price is now in overbought territory though, and maybe warrants a tad bit of caution for fresh longs. Retracements in price would obviously offer better entry points, but also from a mean reversion perspective, price, if you look at it, it's stretched quite a lot higher than its 50-day simple moving average, and even more so for the 200-day longer term moving average. Targets wise, 82, 85 could see some selling come in and see a bit of resistance. On the downside, I look to the former high area of around 77 to 78, with the 21-day exponential moving average just below that. Lastly, finishing off with gold. Gold has been it's I think that triple top's sort of playing out a little bit. It's struggled over the past few weeks, but it has put in a bit of a decent bid now as it came down to that 1725 support. It's back up at the 21-day exponential moving average with the 50-day just above there. The RSI seems to be sort of rolling over at the moment from that, getting quite close to that 55 resistance level. Targets wise on the upside, 1775 with a 50-day simple moving average just above there, and the 1.8 round number level with the 200-day simple moving average would be key for me. On the downside, 1750, which we're close to pretty much right now, and 1725 would be of interest. Friday's jobs data could be an important input for gold's price, so we'll have to see how that plays out. But thanks for joining me today on Technical Tuesdays. I hope you enjoyed it, and I'll see you next week.